Welcome to Momentum Monday. Today is July 14, 2024. We finally saw that huge breakout in small caps last week. And everything started back in November of last year when the Fed hinted that they're done raising rates. And ever since that message, small caps rallied about 25% in about a couple months in November and December, and they absolutely outperformed anything else during that period. And then in January, when the new year started and when all of a sudden we started to see inflation reports a little bit above expectations, small caps just went in a sideways range-bound fashion. So for 6 months, they didn't really do anything. And believe it or not, before last week, Russell 2000, the small cap index was flat for the year. So fast forward to last week, first, Jeremy Powell, the Fed chairman, mentioned that the economy is very likely back to disinflation, which means just slower inflation growth, which is exactly what the market wanted to hear. Then the next day, the CPI inflation report confirmed that it came a little bit below estimates, and small cap had a big gap on Thursday and followed through on Friday. Personally, the way I played this, I bought in anticipation of a breakout. So I had the 203 calls here that I bought on Wednesday, between 125 and 150. It's what I paid for them. And then I sold them the very next day at the open for 5, which was a big mistake because they ended up going much higher. Either way, so the big question is, are small caps going to continue to outperform in the next month or so, at least before the next Fed meeting, which is end of July, I believe. Back in November, when small caps outperformed, there were 3 distinct groups that led, and those were biotech. As you can see here in November, huge move in XBI. November, December, also home builders. Obviously, the sectors that would benefit from lower interest rates. Home builders had a big move here in November to December. You can see NEO, which is a 3x long home builder ETF, went from 40 to 115, almost 3x. Labu, which is a 3x biotech ETF, they went from like about 50 to 140, also almost 3x in that same period. And also regional banks, which we know they have a lot of other issues, but they were also among the best performers. You can see here the regional banks ETF KRE almost doubled in that period, and DPST is the 3x leveraged long ETF from 38 to 103. So also almost tripled. So these are the 3 groups I will be paying attention to. They're actually really the most vulnerable to changes in interest rates. If the market is really expecting a pullback in interest rates, and then the Federal Reserve is going to start a new cycle of cutting rates, those 3 are probably going to run in anticipation of those cuts. And historically, when the Federal Reserve finally starts to cut rates, stocks pull back just because the market kind of runs higher in anticipation of those cuts. So I wouldn't be surprised if we see something similar this time. If we see stocks rally in July, maybe in August, up until the first cut, which most likely will be in September. So I wouldn't be surprised to see a continuation of that rally, especially in small caps, biotech, home builders until that first cut, and then after that first cut, we might see a correction. And the logic behind such price action is that typically the Fed is behind the curve. They're always slow to react. So when they finally decide to cut, the market assumes that they're too late, that the economy has already has slowed down significantly, and maybe it's time for the market to correct. Obviously, this is just one way things might evolve, and we'll see what actually happens. In the meantime, it will be really interesting to see how large caps are going to perform, since they've been leading year to date, and since really January 2023. So it'll be interesting to see how they'll perform as the small caps potentially continue to go higher. I wouldn't be surprised here if the S&P, if the QQQ pull back towards their 50-day moving average and just form another base and just trade in the range for the next couple months or so. But a lot will depend on the market reaction to earnings. The new earnings season has just begun. I think this week we have TSM, which is the biggest manufacturers of chips in the world. They report in the middle of the week. Also ASML, the biggest producer of machines that make chips. So the reaction to those two reports will actually decide the fate of stocks like NVIDIA and AMD and all of the chips name, really. Here's the SMH, the semiconductor CTF. And based on that reaction, we'll probably see a huge impact on the indices, on the S&P 500, on the QQQ. For me, as I said, I would expect a sideways choppy action here, while the small caps try to catch up. Here for small caps, it's really important to hold above 210. Like if there is a pullback, to test that previous breakout level, holding above 210 would be bullish. And you can see here on a daily those huge volume bars that came. So this might be the beginning of a move, and we might see some of those laggards, lagging stocks like home builders, biotech, really go wild for the rest of the summer. But let's see what really happens. This is just one thesis. All right, I think that's enough for this week.